Hey everyone, it's Nick with Us versus Herd. If it's your first time here, hit the subscribe button. If you want to get notifications when we go live, hit the bell. Definitely appreciate you here. The UVH fam is in the house. Last Friday we launched a Discord. Currently 170 members in there already. So the link's below for that. If you're not yet a member of our free options trading group, we got a link for that below as well. If you guys are here right now, say what up. See Keith, Kit, Matthew, FC, Dorian. What's going on? William said he was ducking out, but made out alive the past 2 days. Got labeled a day trader and Tastyworks somehow. Made another 350 today. Oh, man, Matthew, that's what's going on, man. That is what's going on. Alex and Greg. Yeah, I didn't live stream yesterday, but I was like I had to drop a video for you guys yesterday because even though I didn't live stream yesterday, I was like, man, the market was nuts yesterday. Barely escaped. You know, I had a couple bullish positions on, barely escaped before the Fed, you know. And then I had the doctor's appointment all afternoon, and good news is I'm alive and well. Things are looking good. No issues. So we should be good. You know. So hope you guys all made it out of the market alive. Or if you're in right now, you know, keep in mind there's only 4 full trading days left in the year. Monday we're closing at 1 p.m. Central. Tuesday's closed, and then we have Wednesday, Thursday, Friday, and then we have tomorrow, of course. But just remember, Theta is gonna get eaten. just keep that in mind. And we have, you know, VIX. What was VIX at today? I know it hit 30. Where did it close at? Yeah, we hit 30. Okay, it closed at 28. I mean, VIX was up 11%. It hit 30 briefly. So, yesterday I had a weird dream last night where I was dreaming about the market, which, I mean, it's pretty sick in a way that, you know, I'm dreaming about the market, but I want to tell you guys. So I was dreaming about the market last night when I was sleeping, and in the middle of the night, so I woke up in the middle of the night, and the dream was in 15 minutes, in a 15-minute increment, because as you guys know, I use the 15-minute chart. In 15-minute increment, the S&Ps dropped 71% and then came back up to break even within 15 minutes. And I was thinking about all the people that lost their accounts, and I think it was I probably was thinking about this bar right here, where it dropped from 84 down to 25.40. So I was just thinking, like, and in the dream, this bar went from here down to, like, it was like down 71%, and, you know, America ceased to exist. It was nuts. I was just like, all right, well, shotgun, what's going on, man? So I'm glad I woke up and the S&Ps were not down 71%, because we would be having a much bigger problem. I mean, sure, we're down 2% or 1.5%, but it was crazy. Oliver, I agree. Liquidity is a real concern. Yeah, I dream about the stock market. I hate to say it, guys. S&P to 750 below. Yeah, it was definitely nuts. Okay, so to get into things, you know, I tried to yesterday on my video. I did a video yesterday, kind of recap my trades yesterday. But today, kind of walk you through what happened. Down $20 on the day. I was actually down about 100 near open. So down 20 is not so bad, but obviously it's not what I want to do. And I made a I don't want to say it was like a noob mistake, but I want to say it was definitely Alibaba faked me out. So let me walk you through this trade here in Alibaba. So these are the trades that I put on or took off today. As you can see, it wasn't like a crazy busy day, but so Alibaba, I took off for 98 cents. Let's get some context on here. Show you guys the whole trade. Okay, let's go. When did I put? Okay, so yeah, right here. Okay. So on December 18th, I put on the 135 put, 146 call for $1.70. I took it off for 98 cents. I did get back 98 cents. However, I did lose $72 on this trade. And let me walk you through kind of what happened here on Baba today. So Baba, my original position on this on 1218 was a bullish position. It was a bullish strangle that turned bearish because it dropped so much. So it was a bullish position. I thought that it was going to rip back up into like the 147, 150 area. As you can see, this week it did not happen. Alibaba went from 153, it touched 132. So it's down $20 in the whole week. But what happened was it's kind of did the same thing as it did yesterday. So yesterday, as the market was dropping, if you take a look at yesterday, Baba was pretty flat all day yesterday until the afternoon, and then started to drop when the Fed news came out, and then it really started to accelerate. So I thought I left the position on because I'm like, okay, pretty good chance we're gonna wake up. Maybe it's gonna be 134, 133, or maybe even that 135, which would have been fine. I did have the opportunity yesterday to close it out break even, but since I was already thinking we were going to have a down day today, I did have the direction right. We did have a down day today. But the one concern that I had on today, on today's chart, was tomorrow it expires. I still had 98 cents in there. I didn't want to lose that 98 cents and have it turn into a max loss of like $170 or $150 loser. Yes, I lost $72, but I didn't want to lose $170 or $150. I wanted to, so I was really trying to mitigate the damage because yesterday, if you look at the chart here, this was yesterday morning. It went from 141 down to 139, back up to 141. It's just really playing games. And this morning, Alibaba was playing games as well. Let's go into here. At the time, show you what this looks like. So kind of give you context of what I was thinking. So this morning it touched 135.30 and went all the way up to 137.75. So super wide range. Then it kind of settled in around 136, and I'm like, okay, looks like it's gonna break lower. And the bar that faked me out was this big green bar here when it didn't break down to like below 135.75. When it didn't break that, it ramped up. I instantly went from break even to a $70 loser. And that's kind of shows you why I was kind of, I don't want to say scared, but I would say anxious or nervous about the position, because if you go from break even to down $70 in minutes, you can easily go from down $70 to max loss instantly. If this went back up to 140, because it's so close to expiration, if this went back up to 140, if it went from 137 all up to 140 or even 138 or 139, I'm gonna be facing some big problems. Julia, what's going on? I was gonna face some big problems. So I was mitigating the damage, and then as you can see, I would have then closed those out pretty nice. If we're looking at those calls here, or those puts, I mean, let's see what those puts were trading for. So I mean, sometimes when you're playing it safe, you do get hurt, and you don't make the right call. They went from this morning. Let's just show you today. They were, when I sold them off, what time did I sell it off at? I sold it off at 9:45. So I sold them right down in here. Not the lows, thankfully. So I sold it right down in here. It was like $1.30. I got like $1.34. These went all the way up to 310 today. So this, and Alibaba was kind of like my lap. So this week, I'm most likely going to end up break even or down a little bit money, maybe down 100. And the reason for that is because I've been bag holding this IBM trade here that expires this week, so I'm going to lose like 280 or so. So I'm up right now on the week. However, with this like 280, 288 loss here that expires tomorrow, it's going to bring me back down to break even or down 50 or somewhere around there. We'll have to do the math. But it'll be nice to clean this up because I've been bag holding these 135 calls in IBM. So this BABA trade, because I'm not looking to get too aggressive into next week because it's the last week of the month. You don't want to get too aggressive. It's hard to say. It's hard to say if volume's going to dry up, if it's going to be a slow week or things will pick up. I don't. You don't know. We can't predict the future. It's Christmas week. A lot of variables, but also a lot of things could happen before 2019 too. That people trying to clean up balance sheets. Maybe they want to take a loss. Who knows? And at this point in time, like BABA was probably my last really good position that I had on, because I closed all my positions yesterday. As you guys saw my stream yesterday, I was up $300 on the day, and I took about 170 in realized profit per account. So today, not so bad. I closed down 20, but this could have been the trade that would have pretty much evened out that IBM trade so that I could remain profitable this week. So this week I'm probably going to be like break even or down a little bit, unfortunately, but it's happened. I'm at the same time though, I'm very happy that I kept my account safe. I took in I executed, because sometimes when you see a chart like this, especially like Alibaba is it's a crazy stock. This could have went from 137 to 146. Like if anybody here has traded Alibaba, they know exactly what I'm talking about. This could rip in minutes, $5, $10, like nothing. You know what I mean? Like nothing. So, when you think Alibaba's been down a lot, it could easily rip back up to 140, especially when it was struggling to go down yesterday until the Fed minutes came out. So, it wasn't happening. Yes, I lost a little bit of money, but at the same time, we learned. But if I were to do it again, honestly, if I were to do this trade again, honestly, I probably would have made the same mistake. And because most times when I do that, it saves me money. If this ripped back up to 140, I would have been like, man, this would have been a great trade. It wouldn't have been a great trade, but it would have been great discipline. I mitigated the damage and I didn't go max loss. But in this case, it went the other direction, and I would have been up more money. But that's the thing. You can always do things different. And in this market, people are going to have a lot of regrets. Only if I let those puts ride out. Only if I did. I had 119 puts in IBM yesterday that I cut for a nice profit. If only I had those left today when it hit 111. I mean, as a trader, you kind of have to get beyond the what if I did this or what if I did that, and just forget about it. Move on to the next trade. Forget about it. Move on to the next trade, because you can always do things different in retrospect. But in that moment, you could be like, there's a million things going on in your mind. You don't want to lose money. You want to protect your account. What other trades do you have on that kind of offset it? I mean, So yes, I mean, I'm not saying at the time I would say I was a little bit salty, but then I moved on. I was like, okay, well, you could either get upset about it or whatever. It's not going to change anything, or just move on, just like we always do. So I moved on and I took my loss, and then I was starting to build back profits today. So feel definitely good about that. That is something I want to discuss. End of year market conditions are interesting. I feel like it could propel your positions higher and make losses bigger. Yeah, FC. I think the rules don't apply to this December, because normally Decembers are green. Normally Decembers are green, and I don't know what percentage of that loss a couple days ago. This month was down 7%. I think we're down what? We're probably down 8 to 9% now on in December, which is really crazy, hard to believe. So after we got through that trade, we moved on. We moved on to Twitter. Shout out to my man Hamed for pointing out Twitter. Shout out to Jeff. Citron Research downgraded Twitter today. As you guys know, Citron Research that's what they do. Whether they're right or wrong, that's what they do. So I bought the 29.5 put. 32 call for next week. I'm starting to push things into next week now, and I didn't think that the trade was going to work out that fast. And when I put that on, I put it on at 9:52 in the morning. So where was it? It was right in here, right when I was starting to level off a little bit, right before this leg down, this final leg down. And then when it hit the lows here, I took the trade off. So it wasn't a big winner. I did make about 30% on it, which is good. In this market, just so you guys know, a lot of people, like before we got, like the last couple weeks since Thanksgiving, I really haven't been posting 100%, 200% returns. I've been concentrating on more like 30 to 50% returns, because waiting in this type of market, you get screwed. Hornet Gamer, what's going on? So I've been minimizing my gains, but I've been more consistent. And the week back from Thanksgiving, I lost $1,000, and then the following week I made $2,000, and then the week after that, last week I made $1,000, and then this week we're probably going to end flat unless gold goes down, or GLD. But MU I was able to take off as well. So yesterday I put on an after earnings MU trade, $1.45. I took it out. I took it off for $1.94. I bought the 33 put, 35 call. This was for next week, December 28th. So I had time on it. The one thing I didn't like about MU was this morning it had so much strength that yesterday I was profitable by like 50 bucks or so. This morning it had so much strength until it ultimately sold off. So that when it started selling off, I took my profits then. So as you can see here, based on this, I went plus 49 per account on MU, 45 on Twitter, down 28 on Bank of America, and down 72 on BABA. So on MU and Twitter, I mostly got back what I lost on these other trades. So that's why it kind of balances out there. It's terrible that BABA, I could have made some money on that, but at the end of the day, it is what it is. So MU, nice after earnings trade, 20, 30% winner there. And then my final trade of the day, I got in on GLD for January 4th, 15 days out, was a bearish strangle. I got the 119 put, the 122 call. And the reason why I did that was it's kind of like a bullish hedge against the market. If the market goes up, this should retract a little bit down to like the 118, 117 area. Right now it's kind of GLD is really just floating around out here, up in here. So it could come back into the consolidation area. And I've only paid $1.07 for it. So it was a relatively cheap play as well. And I wasn't looking to get too aggressive. And also, if it doesn't work out immediately, like in next week, I got 15 days, so I got some time for it to kind of figure out what it wants to do. So, I figured for $1.07, pretty cheap trade into hedge against But other than that, once I took off that position, once I took off all those positions, I only had IBM, which is worthless, and I only had USO. And USO, I did average down a little bit yesterday, but now, it doesn't look good for USO. So I lost $24 on the day there. So that's where that extra $20 came. So USO added to that $20 loss there. Baron, what's going on? So USO, I'm not going to do anything with. I think I'm done trading USO for a while. We made some nice money on USO when it was coming down from 12 to 10. But ever since it got down to like the 10 area, we really haven't been making money on it. So we'll reevaluate. Same with GE. I'm pretty much done with trading GE for a little bit until if that wants to bounce back up to the 8 or 9 area. But for right now, if I notice like on USO or like GE, if I have a losing trade and then I have another losing trade, tend to start to back off a little bit, and seems like the opportunity or the way that I trade isn't there. Like it may be opportunity for somebody else, but my trading style and the way that I trade, it's not working out. So then you kind of reevaluate instead of keep throwing money in there. Yeah, and I typically, I've talked about this before, like single-digit stocks, I typically don't do very well in. Some people do, and that's great, but for me, it's just not my trading style, and I don't really thrive in single-digit stocks as much as I do in the higher price stocks, $30 and above, or even $15, Baron got paid on on T. If you made money today, comment got paid. If you lost money today, comment learned a lesson. So Bank of America, why I closed that out for, I mean, I got $77 back. I did take a $28 loss on it per account. And the reason for that, reason why I took it off is because I was in the money. We were in the money yesterday, and it just wasn't making any money. We had sideways action. I put this on. When did I put this on? I mean, a while ago. I've just been bag holding Bank of America. I just had to cut it because. Okay, so it's now the 20th. I've been holding this for over a week. And I've just been losing money on the position. So I was in the money pretty deep, and I'm still losing money on the position. So I just figured, let's get the $77 out of there. We'll redeploy the capital and not trade Bank of America for a little bit because it was a tough trade down here. I mean, we definitely, you definitely made money in here, but down in the consolidation area, premiums were fat, and then IV went down, as you can see. Premium was fat, then IV went down, and then today it finally broke down lower, but I was still losing on the trade, so it really wasn't worth it to keep it on. Take that $77, redeploy it somewhere else, take the $28 hit, and just kind of move on. And this trade was expiring next week. I didn't want to take this in and potentially go max loss or have it be a 50% loser. Just take the $28, take $28 loss, and move on. Yeah, Greg, it's a hard one. Oh man, Kyler said everyone's getting paid. Nice. So I'll take the $20 hit so across my accounts, I lost $80 on the day. Yesterday I was up pretty big. So I'll lose $80 if you guys all win. I'm cool with that. Carmine was sidelined. Yeah, the one thing, I mean, we'll talk about S&Ps here. The one thing that I did try to get in on was, let's see here. So one other position, I'll show you my canceled orders here, was on Netflix. I was really trying to get in a put credit spread, but I wasn't trying to get too aggressive. What I was looking at on Netflix today, I was trying to get on this trade, but it just wouldn't fill for me, so I just didn't want to force it. I really liked it sitting at this 260 line, and then it got bought up pretty quick once it hit the 250s today and came back up to 260. So I was looking to buy a put spread. I was looking to put on a put credit spread for next week expiration. I was looking at shorting the 262.50, the 262.50 put, and buying the 260 put. And I was trying to get like $1.20, $1.25. Right now I was going for $1.18. And as you can see, my orders weren't filling. I tried $1.25. I tried $1.20. Didn't get filled. It was moving pretty fast. And as you can see here, Netflix, at the end of the day, had a nice recovery. But when I was trying to put the order on in here, it just wasn't happening. Like, it went all the way up and went all the way down, and then probably could have got filled definitely down in this area when I hit 259 again. But I just didn't want to force the trade. Like, if it did this, ripped up, and then came all the way back down to 253, definitely would have regretted it. So normally when I try 2 times and I don't get a fill, I don't usually go back in, because I know that when I force credit spreads, typically it's not in my best interest, and I'm doing it on their pricing instead of my pricing. I'd rather have them come to me on my pricing than like on their go to them on their terms. I wanted someone to grab the 120 or the 125 instead of me going to the 118 or even like the 115 and 110. And the price fluctuation was just so crazy in that. Yes, there's nice volume on that, but the pricing fluctuation was just so crazy. But I was really looking for a trade in there. So maybe tomorrow, if Netflix can come down, I'll put another spread on. We'll see. I'm not looking to chase Netflix. As you can see, the range is really tight here also on Netflix. If it stays between 260 and 280, which it has been, it's going to be tough. You know, I was pretty much just wanted to put it on today and let it go till Monday and take it off. But, you know. Nick, what's your feeling on the market tomorrow? Think it's going to stop dropping? I mentioned this. Baron, I mentioned this on my video last night. I don't know if you watched. I dropped it. I dropped it kind of late, and I've been telling you guys for a while. Below, if we start making closes, if the market starts closing on the S&Ps below 2,600, we're going to be in some serious trouble. And then we started closing below 2,600, and as you can see now, you know, rewind the tape. I've been saying this for weeks. You know, when we kept bouncing off 2,600, kept bouncing around 2,600, I said if we start closing below 2,600, we're going to be in some serious trouble. And as you can see, as soon as we started closing below 2,600, we have not had a green day. You know, we closed below 2,600 here, and we've stayed below there. We went as low as 2,441 today, and you know, in just 5 trading days, we went from, you know, this chart's a little bit better. In just 5 trading days, we went from 2,670 all the way down to 2,467. You know, 200 points on the S&P in 5 trading days. I mean, that is insane. That's just like ridiculous. Like, that's crazy. But if you're looking at the 2-year chart, which I've been showing you guys, let me condense myself down here. You know, if we're looking here in this area, I brought this up a couple times. In September to October, September to December, and into January of 2017 here. At the end of 2017, for a full quarter, we went straight up. Like in this area of 2,400 to 2,500, 2,500 to 2,600, there was no support. We started building some brand new support in February. Once the market started to recover, we started building some support in the 2,600 area, and that's why we kept bouncing around in this area. But once we finally broke through, nothing here supporting it. I mean, if you look back in October and September 2017, we were green every single day, no consolidation. We just went up. And then, you know, we did spend quite a bit of time in early 2017 between 2,300 and 2,400. But like I said, not really a whole lot of consolidation there. We don't have solid ground right now on where we're at. So they might just bring this down to the low 2,400s, or even to like the 2,350 area is definitely not out of the question. You know, I definitely could see us consolidating between 2,300 and 2,400, but we also need a catalyst. We have no catalyst. Like, all the news is bad. Earnings have been surprisingly good, but the market doesn't care about that. The market cares about politics right now. They don't care about the numbers, and they just care about the news. Like, all this is very news driven, and it's hard to say, you know, how low can we go? I mean, you know, last night in my dream, I went down 71%. But I mean, just to give you some context, though, I mean, if you're looking at this chart, we're still pretty high up in regards to like 2017. I mean, we're still up pretty good on 2017 numbers. You know, when we started 2017, this was only like 2,200, 2,250, 2,260. You know, we're at 2,400, 2,500. I mean, that's not bad. You know, yes, looks like 2018 is going to be a red year. But let me actually pull up. I actually had a. Let's see if I can pull it up here. Let's see. Yeah, I don't know if I'm going to be able to find it right now. I had a chart to kind of give you some context. so you can kind of understand. Okay, here we go. Here we go. Okay, so here we go. Here's the S&P historical returns. 2017 we were up 21%. 2016 we're up 12%. We haven't had a red year on the S&Ps since 2008. Since 2008 we dropped 37%. So we haven't had a red year on the S&Ps in 10 years, you know. And if you put that into context, I mean, you know, it's due. And after 2008, they got that all back in 2 years. In 2010, anything beyond 2010 was cake. You know what I mean? So, you know, within 2 years, you know, they got back all of 2008 returns, losses. I mean, so 2009, 2010, we met it, and then everything else has just been icing on the cake. We've just been going up and up and up and up and up, and you know, it's definitely due for a pullback. And you know, if you're kind of going back to some different times, and you know, it's when you don't know where things are going, because like a lot of these, you know, people, like a lot of us weren't trading in the 90s or the 80s or the 70s, so it's always nice to kind of go back and see, you know, what happened. You know, if you look at 1990, we had a down year in 1990, and the next down year was in 2000. So that's another cycle. You know, same as 2008. Now it's 2018. You know, down year, but this down year is only 3%. You know, so it wasn't like huge. But 1990, we had a down year. Then we didn't have another down year for 10 years. Unfortunately, we had 10 down years, but we definitely, I mean, 3 down years, but we definitely made up for it in the meantime. You know, if you go back into, you know, the 80s, you know, from 1990, the next down year was 9 years apart. So most of the times, I mean, we're going up, but the 70s were a little bit rough. Obviously, as you can see here, we had some down years. But if you look at these returns here, these look at 1973, 14%, 1974, 26%. That was all made back, you know. So, you know, historically we're going up. Like, I wouldn't be concerned. Like, people say we're going to a bear market. That doesn't mean we're going to the zero. It just means we're not going up anymore, you know. But historically speaking, when we have a down year, historically, the year following that, we usually have an up year, and we have a couple, you know. Most of the time, as you can look here, most down years were not followed by another down year. You know, obviously the Great Depression, that's kind of different. But, you know, since 1942, we only had, let's see here. Okay, only 2 times did we, so 1974, 1973, and then in the 2000s when we had the dot-com crash, only 2 times in the last, you know, 50 years have we had 2 down years in a row. Multiple down years in a row, I guess I could say. More than 2 or more. And, you know, I'm not saying I'm starting to say, I'm not saying 2019 is not going to be a red year. I'm not saying that at all. 2019, we could have a down year now, next year too. You know, I'm not saying that. We can easily, you know, charts are meant to be broken, cycles are meant to be broken. You know, we could have 4 down years in a row. You know, I'm not saying I don't want that to happen. But, you know, if you're looking at the stats here, you're looking at the numbers, if we have a down year next year, 2019, we most likely won't have a down year in 2020. You know, unless we hit a global depression or something like that, like something crazy, you know. So S&P closed green every day. So, I mean, just because we have down years, it's then met with years that we increase more than we went down every single time. So just keep that in mind. Yes, let's say we have a 10% down year. We're probably going to make that back in 1 year or less. So just keep that in mind. The bounce will be real. The rip up will be real. Like this, like I feel like this could easily, as quickly as it's gone down from 2,900 down to 2,400, we could easily go back up to 2,900. Obviously, it's going to take some time. Things have to work out politically. It has to work out. I mean, we're not going to just go up just because. Obviously, it's going to take some time. Investor confidence is going to have to come back because a lot of people that were buying, there was a lot of FOMO in December and January of last year. A lot of people just had FOMO. Like, look at this chart here. Look at this. I mean, 2,600 to 2,870, 200 points, and it took a month and a half. We just lost 200 points in 5 days. So just put that in context for you. It went green. We were pretty much green every single day, and it took a month and a half to go up 200 points. If you think about what's happening now, we just lost 200 points in 5 days at a much lower level. This was a much easier level to achieve because we were much higher. We're at 2,600, 2,800. Now we dropped 200 points, and it's the percentage-wise, it's going to be higher because we're at a much lower number. So we're dropping more percentage points faster then we're obviously gaining them. FaceApp, what's going on? Easy, I'm getting rich with knowledge. Yeah, I'm just trying to put some context in for you guys because everyone's saying like it's all doom and gloom and stuff like that. And sure, overall things look messed up. I mean, I'm not gonna lie. We're going from 2,800 to 2,400. How long did it take us to go from 20? So it took us since December 3rd to go from 2,800 down to 2,467. So what is that? 17 days. So it took us 17 days, and I'm talking less than that because these are business days. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, 13 days. 13 days for us to shed almost 400 points, 350 points on the S&Ps. So, but we're paying the price. We went up 21%. We went up 21% in 2017. Like, you pay for it eventually. Baron, I kind of went off on a tangent there. To answer your question, are we going to be red or green tomorrow? I mean, most likely red. I have a feeling we're probably going to close the year out. We're going to close the year out like in the 2,400 area, 2,500 area. It's just the way it is. I mean, at this point, people are going to start giving up. There's only like four or five trading days left in the year. People are going to give up. They're just going to say, okay, like right now, probably what's happening, like kind of what I did today was, all right, clean up my portfolio. I'm getting ready. Christmas Eve, I'm not going to trade. Christmas Eve, I'm going to take it easy. Christmas Day, market's closed. And then what? You have 3 days left in the year after Christmas Day. You have 3 days left, and you're just like chilling. What are you going to, like, what are you really going to do in 3 days? Like, what are you going to do in 3 days, really? So, like, next week, Wednesday, I'm going to start putting on 2019 positions. I'm not going to, if I cash those positions out that week, great. But I'm going to start loading up for January. I'll start making moves in for January. I'm pretty much done for this year. All the trades that I had on for this year, I close out today. So I really don't have any trades going on because next week, you want to take it easy. You don't want to be stressed out by the market. You don't want to have too many positions on. And also, you don't want to be in a position if, let's say, next week the market's flat because nobody's around and we just, it's just the algos pinging back and forth and no one's making money. You're going to lose money. So for me, best to make the decision to take risk off the table, even if it means a small loss or a 50% loser. Realign, come back at it next week, come back at it. But right now, like towards the end of the year, it's really just kind of tidying up, cleaning up. People are going to get really aggressive here. And I'm not saying that's the wrong move, but like for me, for my portfolio and for my schedule, like I want to take it easy next week. I don't want to have to be battling the market, while I'm trying to spend time with my family and traveling and stuff. Tobin, what's up? Star Trader, I'm making money, not a lot of buying. Options or calls is another strategy card to increase my gains. Star Trader, you just got to do what works for you, man. You have to test strategies, paper trade, and see what strategies pay out the most. There's no reason for people to really put money in right now. Yeah, I mean, the other side of this is cash is being taken off the table. You don't know in 2019 in January where a lot of people are maybe sitting on a bunch of cash start loading up. That could happen too. You know, in January, like hedge funds, brokerages, I mean, everyone could be sitting on the sidelines of cash. January hits, they could be loading up. You know, you can't tell me people like Warren Buffett aren't getting hungry right now. They're getting hungry. This is when they buy. So you can't tell me funds like Warren Buffett and other people that have billions or in assets, they're getting hungry. They couldn't buy anything in 2017 because things just went up so quick and so fast. They didn't think that they were waiting for a pullback and we never got one. And now they're seeing major pullback, but they're hungry right now. So I found until the market says it's time again, then people will start jumping in. Alex, no, not red. I have a call. That came to that. It will shock you. Yeah. They're not down there. Just let them sit out. Yeah. So, I mean, in terms of the market, I mean, most likely red tomorrow. Really, at this point, all the charts are broken. What's the real reason for it to go up? You know what I mean? Like, what's the real reason? You know, I have a feeling even if they were to announce a deal with China, wouldn't even make this thing go up right now. Like, that's how bad it is. You know. But the buy the dippers are getting hungry. Buy the dippers are definitely getting hungry. The ones that haven't been burned on this. that is, you know. But the good news is, like, to learn to trade the market, this is a great time to learn to trade the market. If you're just getting started trading the market, or you're just a beginner, this is a great time to learn. Like, 2017 was a terrible time. A lot of people got very lazy because we just went up every day. All you had to do in 2017, buy the dip, you'd be okay. It's very lazy trading. If that position went against you, you really only had to wait one day for it to bounce back. You didn't have to wait. You didn't have to buy positions. You could take on much riskier positions, and they'd be working out just fine. You know, but then that doesn't really work in 2018. You have to manage your risk extremely well in 2018, and you have to stay disciplined. You have to take profits, whether you're a bull or a bear. You had to take profits. Otherwise, you get screwed. Nvidia is below 52 weeks. I think everyone's below 52 weeks. Yeah, not too bad though. I mean, they're still here. I think Apple's near 52 weeks. Square is still up. Facebook is near 52-week lows. Who else was Amazon? Amazon's probably pretty strong. You know, nowhere near 52-week lows. 52 weeks ago, they were at 1,100. They're still holding strong. This is usual. This is a bounce area for Amazon, so it's going to get interesting. Like, a lot of these stocks are balancing on key areas of support, and also like the S&P. Well, the S&Ps are broken. That's no longer supported, but it's going to be very, very interesting going into next year. And that's why, like, taking cash, putting it to the side is not a bad idea for starting January off. Like, I'd rather have cash than positions starting out next year, just so I can take advantage of moves. AMD's one of the stronger ones. I mean, their 52-week low is $9. You know, right now we're sitting at about 18, and it's had some very bullish momentum after dropping from 24, 26 area. It's had some bullish momentum, but now it's facing some rejection. So, we'll definitely see. It's definitely moving with the market, but it's not selling off that hard. Drupka, yeah, keep learning, man. Keep learning. Amazon back to 1100. Do you really think so? I mean, I think that would be. I don't. Honestly, I think the worst Amazon gets is probably the 1300 area. I don't think it's going back to 1100. But Amazon. If you have to think, Amazon and Netflix and all those stocks is a stock that everybody wants in their portfolio. So, when Amazon and Netflix, I mean, nobody wants Facebook anymore, but Amazon and Netflix and those household brands, household names, people want that in their long-term portfolio, and not necessarily to trade, but to have 5 years, 10 years from now. They make Amazon, AWS, Amazon's printing cash. Amazon is printing cash. What about trading commodities next week, good or bad? I mean, I think just in general, I do have a gold position on easy going into January, but I wouldn't put on anything for next week expiration just because there's a lot of variables. Things could dry up and we just have a flat week. And if we had a flat week next week, imagine how much premium would be lost. Just imagine. And how much it would be gained by option sellers. Option sellers, just remember, option sellers have been getting very screwed in these moves. Option sellers have been getting screwed. Option buyers have been getting paid. Just remember, this is a two-way street. So, eventually, option sellers will be getting paid. You just don't know when. When are option sellers going to get paid? It's coming. Option buyers have been getting paid consistently. Option sellers, not that consistent. So just be mindful of that. Eventually it all comes together. Once the numbers from holiday season come out, according to my shopping, Amazon should do well. Yeah. Same discussion as when the market's going to rip up. Yeah, my credit statement says Amazon should go up. Yeah, easy. You're good. You're good on USO. Just keeps dropping. Oil just keeps dropping. Oil, like I said, below $50 a barrel. Definitely trouble. It tried to hang on here. It just couldn't hang, and now we're down. And now we're down here. Nike. I know that you guys were talking about Nike. Nike had earnings. Pretty dramatic here, 67 to 72. We'll see if that holds. Let's see what the expected move is on a Nike today. Let's see who's getting paid on Nike. So the expected move was $6, and it went up 5-ish. So it's within the expected move. If you just bought calls outright, obviously that you're probably making money. Hedge positions probably not making money. Iron Condor definitely making money. Holding that USO call until January max. Yeah, I still have a USO call too, but I'm just gonna let it chill. I'm not gonna do it. I got 29 days on it. Most likely, I'm not gonna do anything about it. We'll cover the $100 loss or $150 loss if it goes max loss some other way. Not too concerned about it, but going into next year, I have GLD, I got USO, and that's my only positions right now. IBM is going to expire tomorrow here, which isn't much of a max loss. It was like 15 cents, yeah. All right, we got 10 minutes in the stream. 10 minutes left in the stream. What else you guys want to look at? Nike, on the other hand, let's see where they were. Yeah, I mean they were getting hit pretty hard too. If this opens up 72, 74 area, but it's still well within range of what it's expecting. You know, if it went down to 60, then it would be real big trouble. But it's still well within range. Yeah, easy. I usually don't sell if my positions are at like max loss or near max loss. I usually just hang on and see if it works out. It's not worth it to me to close the position, even if it's just a couple bucks. I'd rather just leave it on, take it to expiration, see if it randomly bounces back. A lot of times it does come around, or comes around at least a little bit more. But you know, like IBM, this IBM trade never panned out. But I did do a lot of different. Yesterday I made money on IBM. I've been consistently trading strangles in IBM, making this money back. So Discord never ends. Yeah. Yeah, if this video so far was of value to you, hit that like button. Definitely appreciate it. If it's your first time here, say what up. Definitely want to meet you. If you're not yet members of our options trading groups, we got Facebook and Discord channel. Those links are below. If you want to get notifications for when we post videos or when we go live, hit the bell. Oh, MCD, FC. Yeah, McDonald's. Like I said, McDonald's is kind of a tricky one to trade because the volume is not always there. So you have to make sure you trade. You have to trade. Let's see here. Yeah, the volume. You got to be careful about the volume. Like the weeklies are pretty good. Like when you're trading like this week, the volume is pretty good. But if you go out like 2 weeks out, the volume is not very good. It's time for a Coke plug. Coke needs to start paying me. But yeah, I mean it's coming back down probably like the 165 range, honestly. If we're getting some more, I mean they had the thing about McDonald's though, they had great earnings, they have good numbers, they're reporting good numbers after spending almost all year in consolidation. They started to break out, and just because of this market, the way that it's going, it's not being rewarded. I mean, but it's still pretty high up from this lows. I mean, 52-week low was 146. You know, now we're up to 173. So Steve never traded Walmart. Walmart, just so you know, typically like is a slow mover. Recently the market's been moving, so it's been moving pretty good. But if you look like in here, this is pretty slow, and this is pretty slow in here, and now it's just coming back down to, you know, where its consolidation area is. So that's not actually like a bad thing. It's, you know, it's actually probably a pretty good thing. After it filled this gap here, you know, it's a bit of an ugly chart, and it got rejected here at 106 pretty hard. And typically Walmart's is a slow mover, so if I do trade it, you know, you want to do something that's like 3 weeks out because it just takes a long time to get to where you want to go, and then probably want to wait for IV to drop a little bit before you put a position on. But that's also an opportunity here for the option seller. I actually have some McDonald's right here. I have a cup. I just got a drink. Probably keep an eye on it. Finally has a valve. Don't know why I can't find it. What about Kohl's, American Airlines? Yeah, Kohl's also right back down here in consolidation area. So it'll be interesting to see if it can consolidate here and kind of pick up, or if it breaks below. You know, but if it breaks below, the 52-week low is $52. So American Airlines. American Airlines also sitting near 52-week lows. So, like Walmart, this one is also a slow mover. I mean, if you look back in this period, it consolidated for two months. It didn't move. I mean, it moved $1 or $2, and then in here, it's kind of rough. So you just gotta be careful with it. Yes, it has been moving the past couple days, but so is everything. Shaka, man, thank you so much. Thanks for the $10. I really appreciate you, man. Thank you. Really means a lot. Thank you. You deserve much more. I appreciate that. I wonder if RJ got his work back. Yeah, I don't know. I don't know. Hopefully he's okay. Hopefully Richard's okay. He got his van back. I don't know. I didn't see him around today. Airline industry articles said that they are putting all sectors at a buy due to oil. Yeah, I mean it definitely makes the airfares cheaper. Hopefully I can lock some in before oil goes back up. But anyways, you know, there were some regrets this week. We had a lot of great plays. You know, I'll be live streaming tomorrow as well, and we'll try to close this week out. We'll try to close this week out green. See if we can make some day trades tomorrow. You know, we'll see what's gonna happen. I'm glad a lot of you guys got paid. You guys have been playing it safe. Definitely proud of everyone here, learning, growing their accounts. I mean, it's been great. You know, you guys have a great day. If this video was of value to you, hit the like button. I'll definitely see you guys tomorrow. Have a great evening.